Richard Davies, welcome to Searching for Mana.
Thank you, it's great to be here.
Absolute pleasure, fuller introduction. Chief Executive Officer with Alaka Bank. Richard graduated around 2000 from the University of Cambridge, economics graduate, spent the first 4 or 5 years of his career in strategic consulting, and then has spent the last 15 or so years working in senior management positions in large banks, and then more later, an executive in some of the challenges that you will know, such as Oak North, Revolut, TSB. So incredibly excited to go through your bio, Richard. What would be really useful is if you could bring the audience, just in terms of what you're up to right now with Alaka Bank.
Sure. So I actually started with Alaka just over 2 weeks ago, so very fresh off the press in that sense. And Alaka, it got its authorization from the PRA back at the end of last year. And what attracted me was just the chance, with the pandemic having caused just major disruption to the supply of business lending. There's a window of opportunity there to help really address that supply issue. And then in the long term, build a sort of digital plus human bank. I think a lot of people have done digital only for your real micro companies, but for that slightly bigger, more sophisticated SME, I think there's still a very large gap in the market there for someone to provide that digital plus human service.
That's a great turn of phrase. Could you explain what that means in real terms?
Yeah, sure. I think to bring some colour to it, maybe it's a manufacturing business that's turning over a couple of £1 million with, say, 40, 50 employees. That's a fairly significant sized business. For the owner manager, it's their lifeblood. They're not going to be doing sort of mobile only, basic sort of payment accounts. But equally, the people who do provide services to that sort of business today, typically the high street banks or possibly a monoline specialist finance outfit. And the high street banks have been, I guess, withdrawing people and struggle with legacy technology to serve those companies. And then the monolines are monolines. So they may do a good job of financing an invoice or an asset, but it's quite hard for the SME to piece that all together. And you rarely go into business to be a finance director. You go into business to design products, to sell products, to serve customers. And so I just think there's a real interesting space there in companies that are below corporate, but bigger than micro enterprise, of how you combine the sort of the digital experience that people are looking for these days with the human knowledge, touch, empathy, which is I think very needed if you're an owner manager of a mid-sized business.
Absolutely. And the classic thing that we hear in corporate lending for that size of SME is that the computer says no. And actually, of course, these businesses are also intricate, and that's where the human element, somebody who's got a lot of experience of appraising perhaps the fundamental assets they do have, which can be many different intangible things, certainly sounds refreshing to me that you and Alaka Bank are looking to better that. On that point, there is a number of companies that are after this space. Certainly for the last few years, you worked out in a significant role, and our first ever podcast was Valentina from Oak North. This plays into that level of business, potentially slightly their model is businesses that are slightly more mature, slightly bigger revenue, from what I can understand. It's not a market where just one company wins the market, so to have more people addressing it is positive. But could you perhaps, for us in the audience, just cut up that space, list through any names that you think are doing good jobs, and where you see particularly Alaka's niche within it?
Sure. So I think, say, Oak North would be definitely above Alaka in terms of the size spectrum. Yeah. So sort of quasi-corporate really. And I saw just some news today that extended a £50 million facility to a company, which is, a very large facility, whereas I'm sort of talking about more 200 grand, 500 grand, million, 2 million type facilities. So much more for that sort of established SME as opposed to sort of smallish corporate. So I think there are players in that space. So it's not like it's a completely unserviced market. But outside of the high street banks, it's really people are doing particular products on a specialist basis. And they may do a couple of products, so they might do asset finance and invoice finance, but they're done as individual products and they're done typically through brokers, so rather than direct customer relationship. And I guess probably one of the points there is just, can you replicate the range of products an SME needs with then a relationship that helps the SME access those products and to your point, helps ensure it's not just a computer says no approach.
So would this be companies such as iWalker and Tide, for instance?
So those would be smaller. So very much Tide is in the, I guess, what I call real micro enterprise space. So typically 0, 1, 2, 3 employee type companies. And there's 4 million 0, 1 person employee businesses in the UK. So it's a very different space to a, I'd say, £2 million turnover manufacturing company and quasi retail. And I think it's been great to see the innovation go into that space over the last 3 or 4 years, from Tide, from Starling, from Coconut, from Counting Up. Actually, I was angel invested in a couple of these companies. And it's great to see that innovation come through. But that's, again, a very different space. It's quasi retail and very, very high volume. And it's not relationship as such. It's a great digital interface in the same way as a retail customer, you'd want the same thing.
It's a fantastic opportunity to get your teeth into, and you've just joined. How's it going? Everyone being nice to you?
Yeah, listen, I think from a people point of view, it's been great. The culture is very open, welcoming, collaborative, and one of the things I was most pleased to see was we did a staff survey from July, and clearly with the remote working, lockdown, I think quite a few businesses have seen some issues around morale and mental health and various things like that. And I was just super encouraged to see that 90% of staff would recommend Alica as a place to work, so 10% neutral and 0 detractors. So I was kind of like an employee net promoter score type measure, a single way to sort of look at the business, and people-wise, 90% is a damn good ENPS. So as a start point from a sort of how people are feeling, I thought that was great. So clearly a strength to build on there.
So that gives us a really clear window into what you're up to now, and we can come back toward the end of the show on some of the things we're looking into in the future more broadly. But if we take a step back, I mentioned that you went to Cambridge University, but perhaps even before then, if you could talk to us about when you first started thinking about the career that you might form.
Yeah, so I wouldn't say that I thought I'd be doing any of this stuff when I was only 16 or something. I guess I was lucky enough to do a couple of internships with, two very different ones, which perhaps is a bit of a kind of talking point for the rest of my career. So I sort of go from big to small a fair bit. So one was at KPMG and the other was with a tree surgery company, an SME down in Reigate that had 50 odd staff, which was quite interesting in terms of exposure to various different aspects of business and consultancy and so on. So
it was tree surgery.
Tree surgery, yes. Yeah. Chronic Tree Care from memory was the company. I guess probably the KPMG thing, which was consultancy, sort of real taster, I guess, but what led me into going into consultancy post university. But yeah, probably that theme of big and small companies is one that stuck with me through the last 20 years. Yeah.
So, because you didn't directly go into finance after your degree, which was economics with Cambridge, you went and joined LEK. So that decision came from, I've interned with one of the big four, I've enjoyed this looks like a sensible start to my career. And then perhaps if we could get started on trying to work out what Richard Davies' mana is. You know, what's the magic, what's the superpower that has allowed you to have this successful career? When you went to LEK, what were you focused on? What attributes do you put to the early success and focus in your career?
Yeah, so I think actually I interned then at university at LEK, and they offered me a job from that, and sort of perhaps being a bit lazy, I sort of just took that and didn't go look outside of that. So that's how I got into LEK, and I sort of liked it was a very intensive learning experience. So you worked on 2 clients at a time, quite varied work. I mean, God, I did demand forecasting for the kind of Ebbsfleet, the new rail franchise at the time down in the southeast. I did fundraise information memorandum for a wholesale broker. I did case for Smile, looking at the internet bank up in Manchester, part of Co-op, and various other pieces. It's very varied.
So yes,
I like that.
Quite a range. One's an analytical skill set.
Yeah.
Another one's just get up to speed on this and kind of broker out. But that range then allowed you to understand what element you enjoyed the most. And if we look at what you kind of then came out of that that phase focused on when you went into banking, what led you to that?
Yeah, so I think you're right. If you look at, LEK is a very analytical shop, and I mean, actually, when we get to Revolut, that's a very interesting reference point. So I probably had a reasonable analytical streak anyway from my education, but it really honed that in terms of modelling, statistics, logical approach to solving problems, essentially. Plus, gave exposure to techniques like valuation. So it was a really great grounding in, I guess, a whole range of areas of business.
What were you using at that point? Were you using SQL, SAS?
So a bit of SAS, quite a hell of a lot of Excel, including VBA and stuff. And
do you think still Excel is possibly the most important skill set?
Well, I sort of, I'm quite glad they didn't take it as a challenge. I do remember my first week at Revolut. There was a company drinks night, and chatting to one of the data guys there. I probably had too many beers, and he was kind of a Python guy, and it was saying we should have an Excel versus Python offer and see who wins. But no, I think listen, different tools, different things, including some of the stuff you can do nowadays in terms of the algorithmic efficiency of tools like Python is great, whereas Excel is probably a bit more easily decomposable and auditable and so on. So anyway, tools for different jobs, I think both have their place. But yeah, so analytical was clearly a key thing, plus I guess the broader sort of just exposure to many industries, many clients, many problems, and the grounding you get in corporate finance, in corporate strategy. So I'm very grateful.
Did you take an ACA or a CIMA?
No, I thought about it and then didn't. Similar to later on, I thought about an MBA and didn't. I sort of prefer the on-the-job to the qualification almost. I did do a bit of exec education in the GFC. I guess for me, consulting, it was all about learning, and then after 4 years, it felt like the learning had slowed. And so I sort of came to this conclusion I wanted to do rather than just advise. So there's that frustration at the end of 6 weeks of work, you hand over the deck and then you disappear onto the next thing. Whereas I sort of felt that need for skin in the game. I wanted to take the calls and see if I could make it work, basically. And you clearly don't get that in consultancy. So
and that led you on to...
Yeah. And I wasn't... I actually looked at lots of industries at that point. And it's almost happened to FS. I've done some FS work, but I've done lots of other work. So it was almost... probably some people I got into FS. There was some people I sort of I come out of my consultancy, I knew that were in FS, and I think that's what ended up leading me there. And I think it's been good. It could be good in other sectors. I've got plenty of friends that are in utilities or media or telecoms or whatever, and I think horses for courses almost.
But it's interesting because that time frame is toward the beginning of my headhunting career. And it's really, that's why I asked about SAS and SQL. It's really interesting that you came out of, obviously the degree you came out of went into strategic consulting. So, if you go to a Big Four, you could end up in a finance department and then the path might be different. But really the nuts and bolts of your skill set at that point is logic and analytics and, like you said, valuation. That was the point where I really saw finance starting to take that skill set super seriously. And then 5 years before that, actually, these are often people who are, to the side of the core of the business that drove it. And I think that tied in, which has become, I think, the main thing that you're focused on, with really being able to take the large data sets and obviously determine insights out of it and make good risk assessments, make good lending assessments, acquisition assessments. So whether it was serendipitous or not, the timing is really fortunate for then you to move into finance, utilities that you mentioned. If we're looking at the type of people with your background at that point, whether they go into utilities or whether they go into finance, I'd advise finance. The career trajectory is better, I would say. So then you go into banking and then you focused on corporate banking. Is that right? Yeah,
so I did a little bit of retail banking, but very quickly moved into commercial banking. So it was, what must have been March 2006 in Barclays.
This is Barclays.
When I'd done a bit of time in sort of the group, so Paul Idzik, who was the group COO at the time, his team, doing all sorts of stuff. And then my boss at the time, Sanjay Sharma, who moved to be the COO for the commercial bank and took me with him to be head of strategy for the commercial bank.
I used to do a lot of work into the Barclays group, and at that point you had B6, B7, SX levels. So to get to those S levels, you got to do like 9 or 12 internal roundhouse interviews. You don't really get this anymore, but it was such a long process. People would take 6 months to get internally promoted, and then to get somebody from an external position in, maybe 12 stakeholders all having to give the thumbs up, one doesn't, don't get in. So I don't think people maybe understand at that point. Citigroup, Barclays, Lloyds, in certain key roles in senior management, it was really hiring the absolute best people, and you were part of that. So again, this is a really awesome period of time to be in that type of position. And you go on to become what role in?
So I was grateful for Barclays because they took risk on you, which you need if you're to progress, particularly when you're young. So I was head of strategy for the commercial bank, and then start of 2008, I moved to run the Southeast sort of SME region. Which was my first proper job, getting out of the sort of strategy, advisory, analytical world, and suddenly the real world of large team of people and large volume of clients and your lending balance sheets and all of the complexity that brings with it. That's very, very different to the sort of consulting, strategy, analyst stuff that I'd done to that point.
Do you think at that point you'd started to think where you wanted your career to go in terms of, you just mentioned, okay, now I'm developing managerial skills, I'm developing strategic skills, I might be running a P&L.
Yeah, so that was it. Back to that kind of do versus advise. When I left consultancy, the aim had been to get into essentially general management. So you get to help not just devise strategy on slides, but how you execute that strategy day by day, and sort of have the decision making rights around that. So yes, that Southeast role was the first proper step into what you might call general management, albeit in a big bank. I think general management roles are very infrequent because it's so functionalized. So it was really a front office role as opposed to product or operations or technology or risk. But probably the closest you can get to general management role in a commercial bank.
What would you say the thing you look back most fondly about that is, and what would you say the thing that you look back a bit most frustrated about that was?
I mean, God, it was a great role. I mean, probably the sort of the making of me today, because I sort of picked up this team of people quite large, so area directors and then relationship managers under that, and I mean, God, what was I don't know, how was I, 28 or something? I forget exactly, but young, right? And so they're looking at me like some alien creature that's just turned up. And I sort of was, right, because I had this strategy analytical background. But no, I mean, there's some of the people that work with me there, sort of, I've still got relationships with today. And it was kind of like a nice sort of complementary skill set where I guess I was happy to go, look, hey, I don't know about this stuff, but I can do this stuff. And it was almost sort of matching with the skill set that they brings about. Did
you have to play any tricks? Like, you're thinking, I'm 28 here, I've got to put a certain perception across. So maybe if I wear like, a blue blazer with gold buttons and grey trousers and, I get a golf membership and start acting like I'm 50, these people might.
So I'm sure I did some of that, to be honest.
Turn up in your Jaguar.
Yeah, actually, no, I remember one of the guys I'm still in touch with did tell me I need to change my car. So the first time I turned up at his regional office, he was like, that car's not going to work, you need to upgrade that one. But I think there was definitely, you do kind of try and put on a little bit of gravitas, right? But I probably had some of that anyway, but you would have to try and dial it up. But that was probably quite normal because you're a consultant like 22, rocking up to the CFO of a FTSE 250 company. You got to try and put on a bit of gravitas. So I mean, probably that was sort of a bit there anyway. Actually, something that I think has been nice the last few years is I sort of haven't got any of that anymore. You sort of just do your thing basically. And you can be truly authentic. So that's been nice. But I think if you are progressing fast when you're young, it's sort of inevitable. You have a bit of that. But I think you've got to try and resist that. And the thing I'm happy about looking back was I hopefully was fairly honest about just where I could add value, but also where I needed to learn. And I think if you go into these things and you're like, hey, I know it all, when you clearly don't, right? People know you don't, then you're just going to get into a bad place.
I think that's where part of the big wave of emotion in a positive way for fintech has come from, both partly from consumers wanting to trust financial operations that can enable them to do the things they want, and then secondly, a bunch of people who were in banks wanting to do a good job, where it did feel a little bit like a pretense sometimes, right? You're in some type of pigeonhole playing the game, and then fintech challenges came along and people could just be themselves, try and create good business, be authentic. And I think that's been one of the really awesome things over the last 5 years, and I think now traditional banks have got that too. And so I suspect over the next 5 years, some of those previous type of things that you have to do just won't exist, right?
Yeah, I think there's always that thing if you're promoted quite young, there's just okay, it's different. So Revolut, it wasn't really a thing because it's the average age of the company is so young. It's not a thing really in a brand new business, but
that's almost the other way around an issue then. If you're more mature and perhaps less keen to crack on with some of the initiatives that can get you far, then you've almost got a reverse. Actually, I was reading an article, this is a while ago, from somebody who'd come from a traditional bank, where he was like, how should I dress? How do I get this right? Because I'm not comfortable, rocking up, looking like someone in my 20s, but on the same note, I don't need to be stuffy. And you're trying to get this middle, smart, casual type of vibe. It's just this kind of...
but then I sort of almost... I think the thing is... and Revolut's, let's be honest, right, is an extreme here.
Yeah.
In terms of a lot of these aspects. But you've got to just do your thing, to be honest. And the company needs to make sure the fit's there around you being yourself. Because if you're trying to be someone else, that's not a healthy state of affairs. So certainly that's something I've found great in the last few years, and I'm sure partly that's me relaxing a bit into things, and partly I think the environment has relaxed a bit. because I didn't love the kind of. So after the Southeast in Barclays, I went around the global corporates business for the UK, and it was all like harness ties and all this sort of stuff, and it's not particularly me, to be honest. So sort of don't mind a sort of jeans and a hoodie. So it was a great job and really great team to work with. So again, some great relationships with people there I've still got today, but sort of like that sort of real stuffy kind of dressed to impress type thing is not suit me, to be honest. So quite like the fact that the world's relaxed a bit around that, I'd say, the last few years.
So Richard, you had obviously a career in the big banks, and then you got to a point where you thought you fancied moving into a challenger business. What was the thinking?
Yeah, so I was doing that role at Barclays, running the global corporate business to the UK. And it was going great. I mean, we had double-digit growth year on year and great team. But then I got this call around Oak North, and again, probably a theme for the future of my career was sort of one that developed there around. While I was having a great time at Barclays, it just seemed too interesting a thing not to do. The chance to go and start a new bank, and I guess frankly there's been quite a few started since then, but at the time it felt like this could be a sort of once in a lifetime type opportunity to go and do this. So I guess probably the principle I've therefore lived by is if you think you'd regret not taking the shot, take the shot, basically. Yeah. God, that was a super interesting experience. So I was the first, I guess, proper employee. We had a couple of interns, but there was not much in the business plan or the reg license hadn't started. There was no tech or operation model. I remember sort of this stepping out of Barclays to joining Oak North. I think I had 1 week off in between, and you're still from this vast organisation with every possible skill set and function known to man. So suddenly it's kind of you, a couple of interns, and Rishi and Joel, who were actually at the time they were still working pretty flat out on Copal Amber, the business they'd founded, that they were in the process of selling to Moody's. And that was instructive in terms of almost being an SME and how much it's about you and your network. And basically, if you don't do it, it's not going to happen. And if you haven't got the skill set, bloody well find it out.
So that gave you that first real moment of, okay, I've got skin in the game here. Directly what I put in, I get out. And then if we on this mission do that, then we can create something that we're really proud of. And then if we come to a later stage where you're in another headline business in the space, so Revolut, in a significant position, that maybe is one of a handful of the biggest fintech challenges in the world. Talk us through that experience, please.
Yeah, and I think hopefully doing the Oak North thing helped me quite a lot there with Revolut. I think Revolut's a very hard place to join if you've only done large bank to that point. And I think also the LEK thing's relevant. I sort of think in Revolut, if you strip me back to when I was like 21, 22, 23, there's a lot of sort of the characteristics there that are prevalent in Revolut employees. So the sort of analytical, curious, hardworking, driven, problem-solving type stuff, which allowed me to land then into Revolut quite well. Because Revolut's hired a lot of sort of more senior, more experienced professionals over the last year. But when I joined it was like a small number, and so in a business like that, it's moving at just the most amazing pace you can ever imagine. Just real hyper growth. You've just got to land and hit the ground running and add value quickly. Otherwise, you fall by the wayside. Let's be honest, and that happens. And yeah, I think that dual combination of sort of some of the core DNA from LEK plus the Oak North experience, I think massively helped there to land and hit the ground running. And I'm super happy with the progress we made to date, and I'm still involved in a sort of advisory stroke NED capacity. But yeah, if I think back, there was this massive product market fit, but there was this challenge of how do you ensure the whole infrastructure is sort of keeping pace with that. I don't mean the technology platform infrastructure, I mean the sort of the things like the board, like the regulatory relationships, the risk, the compliance, the audit function, the licensing to support the future growth plans into things like credit products or into having bank licenses to take deposits to turn what were payment accounts into deposits to be able to lend them, and just this vast range of stuff alongside launching into markets like the US and Australia and Singapore and Japan. So just, vast range of things going on, seeking to sort of almost, there's a book, Blitzscaling, by Reid Hoffman, and he uses that kind of the analogy of you jump off the cliff with the bits of the plane and you try and kind of assemble as you go down to make sure it flies for you at the bottom or you're dead.
Do you think that there's and of course all these views are your own, focus from the business to try and become profitable in the short term, or actually is there a perspective of we need to just keep blitzscaling and an economy of scale will get us there at some point, like an Amazon type of model? This is what's in the press the whole time, isn't it? You get negative press based on where is the profit levers, and then internally, I'm sure there's a bloody mindedness to taking market share. How do you view that, and where do you see that going in the short term?
Yeah, great question. I think so. The business moved, I think, a fair bit while I was there. So I think Amazon's a good comparison in terms of the mentality is great customer value and strong kind of digital customer experience around that. And the only way you can deliver great customer value on an ongoing basis across multiple product lines is scale. It's just, there's no two ways about it. You've got to have the economies of scale to get the best possible price out of supply chain to provide the best possible value to customers. So there was, that sort of second half of last year, there was a lot of growth in the customer base.
But if we think about who's done that successfully in the last 20 years, then for me, it's companies like Capital One, or perhaps a New Day in the UK, which is a challenger credit card business. So they focus on a product, and then you can get the critical mass to demake profit from it. Whereas with the neobanks, it's very much an account to start with, and then with Revolut, I think we saw the most progress moving into, of course, there's FX, and then there's investment. You can get gold and silver on it now. There's lending with various other businesses. So if you try and take on the whole banking model, then like you say, that scale's so vast, and you've got an incredibly interesting advantage as somebody who's sat in some of the biggest banks. How realistic is it to be able to do that as a challenger?
Yeah, so I think, to be fair, Revolut has sort of, it's kind of like I'm going to mix my analogies, but like if you kind of think equally about sort of a vortex that can draw you in if you don't get enough scale, and sadly, Monzo may or may not be on the edge of that vortex right now. But Revolut, I think, has achieved the breakout from that, right? So it already has enough scale of customers that it is very meaningful, right? So therefore, the economics of suppliers improve significantly, and therefore you see the sort of unit economics start to become quite attractive.
So if it wanted to, just like a Tesla, become operationally profitable, it could.
Yeah.
But it's deciding to carry on taking market.
And actually, the business is looking to move towards profitability right now. So I think that's probably one of the shifts that happened over the time I was there. I think just it's a shift in the investor market as well, right? So I think starting probably with WeWork, but has been massively reinforced with the pandemic.
Yeah.
To go, look, like vanity metrics, really don't care. Revenue growth, great, but show me the unit economics and ultimately show me the bottom line.
Yeah.
So, and I think, I'd say the great thing about Revolut is the fact that it's got now the scale to achieve that. So it's not to compromise, because, 12 months ago, you probably could have hacked things back and made profit, but now it's not necessarily that much of a question of hacking back. It's got enough scale. And, the annual report was published reasonably recently. I think it was, from memory, 170 million-ish of revenue. It was just named as the fastest growing company in the UK. Again, second year running, the only time in history that's happened.
I think it was Europe, wasn't it?
It was different measures, but yes, the fast track and the Deloitte. But yes, many different things showing it. And I guess that's the point, right? It's sort of, there's enough revenue base there that profitability without, unless you're completely reinvesting for growth, you can see a very clear path to profitability. And I think that's great. That makes everyone feel more comfortable, be it investors, be it regulators, even employees, right? People quite like the fact that they can see that trajectory there. And credit to the Revolut team, because that's not easy to do when you are trying to provide just this amazing customer value, this sort of near free type experience on so many products.
We have adverts that, over this period have been getting thousands of applicants. And so we ask a variety of questions. So we're always trying to survey various things. And one of those questions is, which business would you most like to work for? Which business would you absolutely not work for? Revolut highly features in both of these responses. It certainly provokes an emotion in people. If you were to recommend people who wanted to go there, it sounds like somebody who's, from that strategic type of consulting, from that, top 1% of academia is mandatory. But actually having been there and seen what its plans are, some other things that you might impress upon people?
Yeah, I would say IQ, definitely, high IQ for sure. I think there's a bit of those street smart that goes with that. So not just academic IQ, but the ability to apply yourself practically. I think the problem-solving ability may be the same thing as the kind of street smart, i.e. that real focus on what is the thing you're trying to solve and real lateral thinking to solve that. I think then the sort of drive, and I think Nick would use the word grit, the sort of resilience to really persist in getting something done and solving something that's really hard that many people would say is just, they'd give up, right? They'd go, too hard, let's do something else, do something easier. So I think, those sort of characteristics that also lead to people who are very fast-paced, high energy, hard-working, the characteristics. So, it's let's be honest, right? It's not a place for the faint-hearted. It's like in your face, 150 miles an hour place. And I'll be honest, right? There's a lot of people who would not just. It'd be way too much. It would just it would exhaust them within days or weeks.
That's absolutely right, and it's great to hear you just set it straight, because it's what we feel. Part of our job is just to enable people to understand, okay, well, this culture's trying to do this and they've got this mentality and this one's got this, not particularly anything's right nor wrong, but you want to be aware of that. And I think that's the thing with Revolut. Most people probably at this point up front are super excited to get involved into that or not. In terms of where you think it might go over the next 5 years with all this traction then, because it could take on many product lines. What do you think, as somebody who is looking to have one or two bank accounts, where does Revolut feature in that user case?
Revolut is basically turning into a super app. So you can see this in I don't know, WeChat or
Yeah.
Alipay in China. You can see it with Tinkoff in Russia.
Yeah.
That's sort of how do you defragment your financial life with things that are really great value with a great sort of low friction UX around it. So I think there's this. I had this discussion so many times with investors. I'm not sure if they still whether they agree with me or not, but when it comes to Revolut, where does the salary get paid? It sort of matters, but actually what really matters is what are they using day by day? So I should talk about myself, right? So I won't name the bank that's got my salary going into it. It's not like we don't have a current account for retail customers. That money goes into that account, and yes, my mortgage is with the same bank, and the money gets paid from that. But then I transfer a few £100 each week to Revolut, so all my day-to-day spending goes through Revolut. I've got a savings vault which has got whether it's about 1% interest rate on it, so I've got that sort of fairly well stuffed with some savings. I've got money in gold. I've got money in some stocks, and you get the point, right? So way more of my financial life is going on with Revolut than with the bank my salary is going to. So I think the whole definition of primary account, secondary account is is an outdated thing. For me, it's like super app is the right way to think about it. Is where is the customer's day-to-day engagement with financial services?
Yeah, and that's of course where then you can draw insights from the more micro data. There's not much to do really, is there, with a mortgage, which is a long-term loan facility. And do you think that the neobanks will go after that, or they'll leave that to the traditional banks?
For mortgages, I have a very simple view on this, but I can't speak for everyone else in the market. I'll be honest, there's quite a few people who do digital banks who don't really understand banking, which can be dangerous. And ultimately, again, I won't name names, but I remember at Oaknorth, a digital bank coming to me that was live at the time. And going, we've got these deposits from these customers, but we're not making any money out of it. In fact, we're paying money away. Like, how do you actually make money in banking? I'm like, you have to lend some money, or you have to charge for payments. It's kind of how it works. But the same thing, so maybe someone with mortgages, right? But the problem with mortgages is they are, UK, deeply unattractive to do, unless you're doing really specialist mortgages. Because with ring fencing having happened, 2017, I forget. So HSBC in particular, one or two others, a bit less so, got massive amounts of deposits trapped inside the ring fence that previously were funding their non-ring fence bank. They then deployed that liquidity into lending. The biggest lending market is mortgages, and so the mortgage price got forced down very significantly pre the pandemic. And secondly, the regulated forces, it's not really careful my words, they force, but the regulatory rules that are prescribed allow some banks to use their own models and small banks to use standardized capital allocation. And one is a big disadvantage to the other. So you've got a monster like HSBC with this zero cost of funds, putting out mortgages at an incredibly low price with low capital allocated to it. If you're going to go into that as a neobank with a higher cost of funds and higher capital allocated, you're crazy.
Yeah.
Simple as that.
Yeah. So with that logic, the likely prediction that I'm drawing from this is that we'll have super apps where one or two or three of the neobanks win those niches. So you might have a range, or you could have a Revolut that, or like in America, a Chime that really takes that kind of.
Well, hopefully Revolut in America too. Anyway, a battle's still to be fought.
Of course. that really, you are doing almost all of those utilities through, and then you have the primary bank that is servicing the big underwritten long term.
It could well be you could disintermediate mortgages, so you don't have to do the balance sheet. You could have somebody else do the balance sheet. Large pension fund or whatever could actually be taking what is the balance sheet because they want some yield, and you're just intermediating between that. But I think if you want to do the actual balance sheet and hold that balance sheet, it's a mug's game.
Let's assume that you don't, and then I'll just move on from this point. Thinking about servicing the customer, as you said, then that would be best for that super app to do it, because the super app would be able to say, okay, said person has this spending behaviour that looks like actually they could for sure afford a mortgage in this instance. Yep. So we're going to offer that facility up through somebody else who, of course, is providing it.
Yeah.
So in 5 years' time, the best experience would be if you're on Revolut, if you're on Monzo, whatever it might be, or Chime, then that would be offered up to you through the app. That's the dream, isn't it?
It is, though. Again, I think mortgages, the interesting thing there, right? It's a big, big thing in your life when you do it. So you're probably 45 now in terms of average first-time buyer age. Let's go with 30-year-olds is getting a mortgage for the first time. It's quite a scary thing, right? You're borrowing 200 grand or something. By far the biggest financial decision you're going to make in your life today, and probably for the next 10, 15 years after. So, surprising number of people, not surprising when you put it that way, but a large number of people want some hand-holding on that. Yeah. It's not just in-app execution only. Listen, myself, I'll be very cool with in-app execution only, but I think that's a minority. It's about, it's back to that, where it's big and scary, you want a bit of human touch.
Yes, I see that. And that nicely kind of leads us on to where you are right now, which is a big and scary thing for these individuals who own these businesses, where their revenue could be around 2 million circa, as you said. So Alaka Bank's type of focus. And of course, we're in September 2020, so we've been through a half a year of the toughest times because of COVID. It was tough anyway, right, because of Brexit and a variety of things. I wonder what your view on lending is right now, how it's been affected by COVID, and then of course we'll go on to how you see Alaka Bank and others can service that type of individual who's been sat there. Could be a 3-man business, could be a 50-man business. Once you get up to 500 plus, these people typically have got some type of security away from that business. But when you're below that, in that SME below 100 people, I mean, that's real for them. It might be secured, various things can be secured in mortgages, etc.
Yeah, exactly. And I think it's just, wow, this pandemic has been just hugely disruptive to people in that space. And I think clearly if you're in certain sectors, hospitality, travel, clearly it's a massive piece there. But more broadly, I guess, there's been this just change to behaviours, working patterns, the requirements to adopt technology. So there's just this massive change there, both short-term impact that depends on your sector as to how severe that's been. Some sectors are actually fine, in fact some benefited.
Yeah.
And then everyone's had this just impact on their own staff and their own ways of working, that the technology forced on them. So I heard someone saying recently that the sort of digital adoption by SMEs has probably progressed 5-10 years in 6 months. I think that's just such an interesting landscape to sort of be working in as you sort of try and plot the bank for the next decade is sort of how I'm looking at it.
And the real way that I know you're really like in the first phase at Alaka Bank and probably trying to put these plans in place, but your aims in terms of how that human and technical side would help lend to these businesses, how you would look to analyse that, and I suppose if any of the audience have these type of businesses, which ones would you want to get in contact with you or reply, and which ones would you say, okay, we're not for you?
Yeah, so our first sort of product focus in lending is on secured loans, so property secured, equipment or assets secured, so vehicles, machinery, and this sort of stuff, which is the biggest part of the lending market. And so manufacturing companies are a good case in point. So may well own their own property and also have a whole bunch of kit that they need to constantly upgrade and refresh. So I guess that is the start point, but the aim is to build out to sort of a full set of services that includes, for example, working capital and growth finance as well. But it just you've got to do each thing right rather than try and do everything at once wrong. The interesting thing is, what does technology do, and where does the person work in this? I guess is for me the most interesting question. And for me, what are people good at? It's empathy and it's understanding of quite varied circumstances. So if it's sort of cookie cutter, machine does that very well. But if the circumstances can vary to high degrees, then human does that well in terms of that. So you really want to make sure that the person is focused on those things, and then the technology does the other stuff. So manual operational processes is not something I'm a big fan of. It takes time to fully automate all that stuff, but you've got to get to high automation, because that's not a good value add from a person to be doing that work. Credit decisions around lending is an interesting one, because I sort of would use the analogy of weather forecasting, where weather forecasting is still done. There's a hell of a lot of machine learning applied to it, but there's still human interpretation and judgment put as well. And I think probably for sort of mid-size commercial lending upwards, you're in the same space. If you're lending 25,000, 50,000, you should be able to get into quite a largely, the machine learning is a very good predictor of the outcome, because the complexity of the variables is less limited. But as you go up the size spectrum, the business has got more going on, that you've got more of that sort of, I guess, variability and complexity that the human interpretation can add value. But you've still got a base level of information collection, information analysis, and decision support that can get you sort of so far, and then you're applying the human judgment beyond that to the real understanding of the management team, the management strategy, and the dynamics of the competition in that market and so on, which the data essentially is backward looking on rather than forward looking. So I think it's very interesting how you bring all that together.
Okay, so that's regression modeling, looking in terms of, should you lend to that particular SME. In terms of where you'd like this business to go over the next medium term, what are some of the things that you have in mind?
Yeah, so I think the chances there to create the sort of leading light, I guess, in the SME challenger space that makes a difference to tens of thousands of SME owners' lives out there in the UK. So I think, can you really help power some of the recovery of the UK post this pandemic, the sort of the world post Brexit? I think that's just such an interesting kind of mission, because it sort of combines, I guess, my roots in economics, that sort of sense of how the economy works, and sort of a desire, I guess, as an economist to see the UK economically progress with some of the fundamentals of both banking and technology as to how you bring together that sort of human banking expertise with the best of digital experience. So that's very much the mission for the next few years.
It seems absolutely ludicrous to me that if you think of the businesses here, it's starting, right? There is the most chance that this fails at this point. We all know the statistics. And you get to this type of point where a business has been able to generate a significant revenue, right? Then that's so important to, nourish that business at that point, potentially take some type of risk. This is what I don't see. I don't see the lenders at that point taking some type of risk. I think that's hopefully that point that you said about humans having an empathy, where if you can make sure that is threaded into the process, then what an absolutely brilliant thing to be able to do over this next term with, like you say, all the skill sets that you bring from previous experience. I really hope that this goes incredibly well. And I think it's much needed, particularly in this time, as somebody with a bunch of peers and friends out there with, SME businesses trying their best, where the banks just say no. And actually, you're aware that these are the businesses over the next several years. They might not be the Revoluts, right? That's incredibly rare, but they're the lifeblood of the industry. They're employing a bunch of individuals. So I think it's such a great cause to be getting involved in. You've got to this point where you're non-executive. I think you might have hinted at there's some personal investment going on. You're the CEO now of a challenger business. Such a great point to get to the portfolio career almost. How do you see that moving forward? Do you try and get more non-executive roles?
So listen, I think portfolio is probably a bit exaggerating it, to be honest. There's a little bit of time with Revolut, but sort of minor. And I do a bit of angel investing, but it's passive. I mean, actually, my Revolut contract nor my now Alica contract allowed me to spend any material time on anything else, right? So they're sort of passive things. But I guess at some point in the future, I mean, I'm probably still too young to not be an operator, but 10 years out, I'd love to be doing that sort of varied portfolio thing.
But you if you could choose from, potentially even venture, portfolio, non-executive work.
Bit of a mix. I mean, what I like about angel investing is back to the skin in the game thing. It's your money, and you make decisions and see what happens. And I love advising. I mean, I do like advising things. So if you can kind of get a combination of a bit of skin in the game and a bit of advising, be it any deal or whatever, that's a great place to be. But
are there any companies that you've not necessarily invested in, but that you think are just doing brilliant things at the moment?
There's a few, to be honest. So I think, one of my investments a while back was Penta, German neobank doing sort of micro SME stuff. It's doing well. There's an open banking business called Currency, which I was a first round angel investor in, which I think is probably one of the smartest open banking plays I've come across. But I give the impression I've got loads of these things. I haven't. I've literally got 3, so maybe 2 of them. No, that's not. I just like that sort of thing on the side. But 10 years out, I can see I would like to do a lot more of that. But the sort of operator driving me right now is too strong to be. If I haven't got if I'm not sitting in the driver's